Well, stock of the day, AGL Energy. Shares are suffering after a Macquarie note which said financial year 24 is likely to be peak electricity pricing, thus challenging its ability to sustain FY24 earnings into financial year 25. Macquarie downgraded the company to neutral from outperform. Target price $11.43. It's still well above that at the moment. Carl, AGL has been flying, hasn't it, as a stock, and Macquarie's come and been the party pooper.
They are wowzers, aren't they? What a beautiful chart it was. It still is largely, but this, gosh, I've been on ausbiz. I do my regular Friday spots, and I do every other Wednesday. I do the trade with Kyle. And this has been a regular chart that I've been putting in front of ausbiz viewers as a buy. And I think a few weeks ago, it might have been maybe 4 weeks ago, I said it's challenging. I deliberately wanted to put it in on whatever day that was to challenge viewers to buy something that is just, oh my God, almost going up vertically. I think that was around the $11 mark at the time. Look, it's been, if you follow me on Twitter, it's been my most featured chart 1, 2, 3, 4, 5 times since May. Okay, so yeah, that's pretty impressive. Stocks, we'll go in and out of that list, but to be consistently in my list that many times is impressive. We started buying it around about that 850, again at 9, and then a little bit higher. But it's just this idea, when you do find a chart that is starting to build like this, of adding to a winning trade. Most people feel that they need to be all in. So I'm going to buy this, it's going to be the best, and when it goes up and 10 times, I'm going to sell it. I think you're kind of then pegging yourself to the price more. What I prefer to do is if I see something going up, I buy a little bit of it. I mean, I'd like to get in thirds. So if I normally invest $1,000, divide it by 3, I'll buy that amount to start off with. And if it goes down, okay, well, not the end of the world, I only bought a bit of it. If it starts to go up, then I'll add some and I'll add some. There's no real limit to how much I can add. So if you get those exponential moves like this, you can make a great deal of money. Today, this move, so just talking purely from a technical standpoint, I don't care what Macquarie Bank had to state. Honestly, I have no interest in their comments. But from a purely technical standpoint, what it does is it changes the demand-supply dynamics. And we have seen supply come into the market. And that's when I start to, bookends the buying, start to get out of it. And I won't get out of this all at once. And for the people that listen to me in my webinars or follow me on Twitter, we'll be talking about getting out of a third of what we have. So if you, let's say, just use shares. So if I bought 3 shares, 3 shares, 3 shares up to this point, and I've got 12 shares, I'm going to exit a third of that, which is now 4 shares, if that makes any sense.
Yep.
If I get another exit signal, I'll exit a third of what I've got left, and eventually you'll have to round to the last share that you've got to get out. So it's this staged entry and staged exit, which allows you to hang on to the trends as long as possible, but also to take profits as you go. So anyway, that's my philosophy. I'd be exiting 1/3 of my position today based upon the chart.
Okay, and on the chart, when would you exit the next third?
Good question. It's going to depend largely on how the price action evolves from here. Yep. So we've got a peak on the chart. What Macquarie has done is created a peak, a point of supply. I'll be watching the price action. If I get another point of supply that's lower than the first one, by definition, we have to have building supply in the market. We've gone from a phase of building demand. If we are transitioning now to a phase of building supply, I'll get out the next third. Right. And you have to imagine, use your imagination. If you've got 2 mountains, let's imagine you're in the Swiss Alps, Koshi. If you've got 2 peaks, what must be between those 2 peaks?
Yep, the valley.
A valley, right? So that's your next exit. When it breaks through the valley, we are now completing the pattern, and then I'm all out and looking for the next opportunity.
Okay, all right. Are you yodeling in the Swiss Alps about AGL, Michael?
It is actually one that we were looking into. We didn't buy it and we missed out on this sort of recovery, but it's very much a fallen blue chip. It was sort of peaking around almost $30 there at one point, fell to very low levels.
And then the ESG came in and the whole...
Cannon Brooks and all that, splitting up the business. But the reality is it's a company on a very low multiple. I think even now it's about 9 or 10 times earnings, and the earnings trajectory is picking up a lot. Right. So that's always a sort of attractive dynamic. So if you get a good chart, you get a business that's sort of appearing to turn the corner, low valuation, strong earnings growth, then it does seem relatively attractive. However, we haven't pulled the trigger just because we are a little bit concerned about this whole peak energy prices that Macquarie does raise. It's just...
Which is good for us consumers.
Well, this is the thing. They've kind of... So AGL's made a bit of a comeback because energy prices have been very, very high. They've been able to expand their margins.
Which has fed into inflation. And
the coal price has been coming down a lot as well. So they've been able to maintain these margins, and that's why they've been able to upgrade recently this financial year's earnings and also their next year's expectations.
Maintaining and improving the yield.
That's right.
Not to a point of gouging.
I mean, they're a business that's trying to make hay during a good period.
We're talking from an investor and shareholder point of view, so...
Yeah, that's it. So they had a very tough couple of years and they've managed to sort of come out of that in a much stronger position.
Yep.
They have reduced their payout ratio for dividends from about 75%. Now they're going to only pay out between 50 and 70%, which will allow them to conserve more capital, improve their balance sheet, but also then look to pick up different assets or diversify their energy production assets. Look, I'm going to go a hold on this for the moment, but I can see, look, if it starts to pick up again and some buying comes in like Carl sort of indicates, and I can see it being a bit of a trading buy, that's for sure.
Right, okay.